Okay, so how's everybody doing? Y'all excited? I bet you looked at the schedule and just couldn't even hardly sleep last night knowing I was going to be here. All right? Come on. Let me just give you a little bit of background to help you all understand. I am with the Federal, State, and Local Division of Tax-Exempt Government Entities, and what we do, my group, is we audit government entities, federal, state, and local governments. So the topic that we're about to talk about, I will let you know I have now audited in 14 different states and the District of Columbia, and I see what we're about to talk about in almost every single audit. Almost every single one. And that is whether you're paying someone through accounts payable, how you report that on a W-2 or 1099. Prior to coming to the IRS, I actually worked in the finance cabinet for the state of Kentucky, and one of my jobs, and you all know how that is, right? One of your jobs, was I reviewed every single personal service contract with individuals to determine whether we had an employee or independent contract situation. 85% of the time, we had an employee situation, not an independent contractor with those individuals. Why? Because there were a lot of controls in place that we had over that person performing those services. And when that occurs, it creates a situation where we have to report the income that we pay them on a W-2, not a 1099. So what we're going to do is we're going to talk about who are employees for employment tax purposes. We're going to talk about Section 530 of the Revenue Act of 1978. We're going to talk about the classification settlement program. And you see this IRC Section 7436? You all do not care about that, but we're supposed to talk to you about it. But basically, this is the section that deals with if you give somebody a 1099, whether it be for services that may be dealing with a worker class issue, or if you gave somebody a 1099 that was an employee and really they were additional wages. I cannot tell you how many times I've audited and I have seen bonuses reported on a 1099. You would think that just everybody would know that, but that's just not the case. Bonuses would go on the W-2, not the 1099. We have seen other benefits provided put on a 1099 when they all should be run through as W-2. So that Internal Revenue Code Section 7436 deals with those folks you issued a 1099 for. And that's all we're going to say about that because you really don't care about anything else. Because that basically means if we come out and audit and if there is an adjustment, it falls under that Internal Revenue Code section, and we have to give you a different report than a report if it dealt with fringe benefits. And that's what that means. So I know that excites you. Calm down. Hold up. So let's talk about the different types of employees under statute or common law. Most employees fall under common law tests, but there are a few that fall under statute, and we want to talk about those. One of the statutes that exist is what's called Section 218 agreement. How many of you are familiar with Section 218? Raise your hand. Be bold. I got a few. Okay. So let me tell you what that is. Way back when Social Security came about in 1935, it did not include anybody who participated in a government that worked for government, whether it be federal or state. What happened is after a few years, people went, hey, this Social Security thing is going to happen. It's actually going to stick around. And there was very few retirement systems for government employees during that time. So what happened is the states petitioned the federal government and said, hey, can we participate in Social Security? Well, at that time, Congress went, we got a problem. We have this thing that's called the 10th Amendment. And the 10th Amendment separates the power of the federal and state governments. We can't make you participate in a federal program. So the workaround was they created Section 218 of the Social Security Act. And it allowed government, employers, and employees to participate in Social Security. You're thinking, okay, why do we care? That is a great question. Because each state made a decision on how they wanted to participate in Social Security. For example, Massachusetts and Ohio went, nah, we got this in our retirement systems, we don't want to participate. So if you're in Ohio and you work in Ohio, very few people participate in Social Security as a government employee. Very few. The Toledo Mud Hens is one exception, and I have no idea why they decided to do that with them. And a couple of real small entities. But most everybody's in the Ohio retirement systems of some form, and because of that, none of their employees participate in Social Security. Michigan decided kind of a mix. They decided to exclude their police and fire because they had retirement systems for them. They said, our police and fire will not participate in Social Security. We'll put them under retirement. Now, how many of y'all remember that Detroit filed bankruptcy a few years ago? Yep. Guess what was included in the bankruptcy? The police and fire pensions. They got 37 cents on the dollar on their pension, and guess what? They will receive no Social Security because they didn't pay into it as employees. So Michigan's now trying to rewrite their laws to look at that, to go, all right, how do we include them now? Because when they wrote the original agreement, they excluded them. The state of Indiana said, we want to participate, but what we want to do is we're going to give each government the decision whether they want to participate or not. So one of the reasons we put Section 218 here is, if your government entity has a Section 218 agreement, it will tell you that your employees are covered for Social Security, and if your employees are covered for Social Security, they're automatically what? Employees for everything else, right? Would that make sense? Sure. So, that's important to understand. If you have a Section 218 agreement, that comes to bear when looking at individuals that you're paying for services. We'll come back to that. The second thing is there are some employees that are identified by state or local laws. For example, county or city attorneys are specifically mentioned in state statutes around the country. If that's the case, then you cannot be paying a city or county attorney through your vendor file and saying they're an independent contractor when state legislation says they're an employee and that there are certain guidelines that they have to follow. So that's another thing that we look at. And then there are some federal income tax withholdings. However, that does not really affect a lot of government workers. Some of those are the old railroad worker classifications. So that wouldn't really necessarily apply to government entities, but that's out there. The common law test. We talked about that most employees fall under the common law tests. How is an employee defined? When we talk about who is an employee, when we're talking about government entities, we're looking at things like, all right, first of all, is this position under state statute? So we'll take a look at that. Then we'll look to see if there's any exclusions in the Section 218 agreement for these particular positions. Let me give you an example. In some states, they have positions called constables. In other words, they call them justice of the peace. Okay? And in those positions, they say that they are fee-based officials. Fee-based officials under the law says they get all of their money directly from the public. So think Andy Griffith. Remember when he was sheriff and then he turned the plaque around and he was justice of the peace? All right? Any money that came to Sheriff Taylor as justice of the peace was considered fee-based. And if Mayberry had a Section 218 agreement that said that fee-based officials were excluded from income, it was not reported on a W-2 because there was an exclusion under the 218 law for that particular position. Okay? I have no idea. I have not checked out Mayberry's 218. But I'm just saying that would be one of the things we look at. Internal Revenue Code 3401C actually talks about officers, employees, or elected officials or holders of public office. So here's some examples. Mayor. I want to let you all know I have literally gone out and audited a city where the mayor was paid through the accounts payable file. And I said to myself, self? How is that even possible? Because law actually lists mayor. So I sat and talked to the mayor. And the mayor goes, you don't understand. I'm an elected official. Yes, I understand that. He goes, I'm independent. So I asked him, I said, would you please pull out your yellow pages? Now, for you all who are too young to know what a yellow page is, we used to look up people's phone numbers in a book. And there's actually a section that's yellow that talked about businesses, okay? So I asked him to pull out the yellow pages, and he pulled it out, and I said, will you please look up where mayors are listed as businesses? He goes, well, they're not there. I go, you're not an independent contractor. You cannot be. There's no mayors are us in the yellow pages. It's just not there. So mayor is an example of someone who's an employee. Legislator or elected representative, county commissioner, judge or justice of the peace, county or city attorney, marshals, sheriffs, constables, register of deeds, tax collectors or assessors. I've actually seen in some states where they want to treat their tax collectors as independent contractors. Now, how would they ever determine that? Well, you don't understand. The people come in and they pay their taxes directly to that person. Okay, but is he keeping that money? No. Obviously, it's going to the county which that person is part of. A road commissioner, board members. Board members in government entities are always employees. But you would be surprised how many times I see board members paid out of the accounts payable. But this is how I hear people, oh, but you don't understand, we're not paying them a salary, we're just giving them a stipend. I want to let you all know stipend is a very fancy word for income. No, James, you don't understand, we're only giving them $100 a meeting. You're paying them for a service. And board members are specifically mentioned as an example of an employee in a government entity. Well, I've served as a board member on a bank. Okay, stop right there. Totally different thing. Because the law actually mentions board members of government entities as employees. And you want to know why? Because these board members have to follow specific laws, whether federal, state, or local. So they have to be paid through. So you know what? I encourage you all, if you have an accounts payable file that you have access to, or you want to tell somebody about it, it might be really important to check out all those different boards that are paid through accounts payable, because I've seen a lot of that. When we talk about fee-based officials, the law says individuals who receive their income solely from fees received directly from the public. Here's what generally happens. We have a position in Kentucky called Master Commissioners. Master Commissioners are actually in state statute. They are appointed by a district judge for every county. These county commissioners are those folks who they used to sell foreclosed property on the courthouse steps. Now they do it all through the internet. They used to have those auctions and things like that. Well, they do receive that money directly, but they're supposed to turn it over to the administration of the office of the courts, and what they're supposed to do is then say, yes, this is what money you can keep and this is what money. So there's a control factor that's set there. So they are considered employees even though the public is paying them directly. So those, if you think you have a fee-based official, if you have a 218 agreement that says we exclude fee-based officials, is it really a fee-based official? Do they solely get their money directly from the public? We have constables in Kentucky, and these constables are kind of pseudo law enforcement. They are in state statute from the 1700s, and their primary purpose was to bury horses when they died in the community. But you know what constables in Kentucky do now? They direct traffic after church. They'll do anything that will take money, like they'll even deliver summonses, which irritates the sheriffs in Kentucky because the sheriffs go, we're losing money if we're not the ones delivering it. But then attorneys will go, well, you all are so busy, you don't get them out there, and I need to get them out there in a hurry, so we're going to get these guys called constables to do it. Well, under different county rules, there's only so much money you can collect for doing that. And that money has to be turned over to the county, and the county is supposed to turn around and give them what their fee is due. So every county that has these constables, those constables are their employees. Now the counties in Kentucky go, well, we don't want them to be our employees. They're a wild card. We don't even want them on the books anymore. I can't help it. Every time there's an election, constables come up to be elected. And if they're out there doing things and they're receiving money that they're turning over to you, you have to report that on a W-2. We don't want to do that. Okay. I can't help that. You are paying them, and if you're paying them, they would be considered employee because they are not excluded as an employee. All right. So we look at common law employees. This is kind of one of the things that you have to look at and make determinations. When you hire someone, the key is, do you have the right to control and direct the individual? It doesn't mean that you do, but do you have the right to control and direct? Do you all use the phrase, when you go to hire people, you can only hire so many people, and you call it your cap? We're capped at only so many people that we can hire based on the budget that we've been allowed. Okay? So, and you may not call it cap, you might call it something else, but you've got a budget, you know you can only hire so many people, but you've got more work to do than the people you can hire can get done. So you hire somebody else to help fill in the gap. An example of is I was in a county where they had surveyors. They had 2 surveyors who were employees. One, they said, was an independent contractor. I said, what's the difference? Their comment to me was, well, we don't have cap room to hire anybody else. So we're just hiring them and paying them through accounts payable. Fascinating. So let's talk about that. Do they do the same work as the 2 that you have as employees? Oh, yeah. Do you give them an office? Oh, yeah. We give them a computer, too. Because we got reports we want them to generate in our system. Okay. Oh, and they also have a car just like the other people do. Okay. Why are they an independent contractor then? Well, because we don't have enough room in our cap. No, you still report them on a W-2. They're basically what you would consider an employee under contract. They may not be your employee for health insurance. They may not be your employee for retirement or other benefits, but you are paying them for the same service that your employees are performing. They need to be reported on a W-2. Very, very important that you weigh those factors. When we talk about control test, control means you say what is to be done, how it's to be done, and the employer may allow some freedom, but they retain the right to control. Let me give you an example. A lot of hospitals hire doctors. These doctors got medical training somewhere else, right? They were taught how to be a doctor somewhere else. So the hospital's not telling them how to be a doctor. So they may say, well, we want them to be an independent contractor. Because we don't tell them how to be a doctor. Okay, true, but let me ask you this question. Are there policies and procedures that they have to follow? Yes. They'll say, all our employees do. Okay. Thank you for helping me with my point. I'll say, do you tell them what drugs they can prescribe? Oh, absolutely. We have a drug formulary. They can't do any drug they want to. They have to go with what our formulary says. Okay? Do they have to follow your sexual harassment policies? Yes. Do they have to follow your protocols? Yes. Do they fill out your paperwork? Yes. So you hear what I'm getting at? Where are the controls? The hospital has the controls. Even though they say, well, we'll let them diagnose the patient however they want. Well, that's sweet of you, but you're controlling all these other factors. Therefore, they're your employee. They're not really an independent contractor. So you have to ask yourself, how much control do we have the right? Because you know what an independent contractor is. You bring someone in to work on your heating system, right? They'll come when they can. They'll fix it. They'll tell you what parts are needed. You actually have a contract to have them do that. That person is coming in as truly an independent contractor because they're coming in for a one-time fix, and you're paying them for that service. So they wouldn't be typically your maintenance worker that you hire. This is someone who is specialized that comes in, and you're not really controlling what happens. You're asking them to fix something. And that's what their expertise is doing. Test under the common law, we look at 3 categories of facts: behavioral control, financial control, and relationship of the parties. One thing that I used to see all the time in county governments was individuals who were janitors, and they were paid as independent contractors. So I said, well, let's talk about that. Let's talk about that. I don't see a contract for that person. Oh, well, yeah, I know. Several years ago, we needed someone to clean up, and we knew Janet could do it. Okay. So does Janet bring the vacuum cleaner? No, it's our vacuum cleaner. Does Janet bring the toilet paper? No. Do you tell Janet when she can be there? Yes, we tell her specifically she can work between 4 and 8 each day. Okay? So you've set the hours. You're providing everything. And then you've had this long, how long has Janet been here? 15 years. Do you renew that contract? No, we don't even do a contract. We hired her and we just agree what we're going to pay her. Okay. So let's look at the facts with behavioral control, financial control, and relationship to the parties. First of all, in behavioral control, there are things you look at. Do we provide instructions? Is any training provided? Is a government identification given? These are just examples. They're not all inclusive. What's the nature of the occupation, and is there any kind of evaluation system? So when we look at behavioral control, let's look at this janitor. In the example that I gave you, does any of that fall into behavioral control? They give her instructions, don't they? When can you be here? Between 4 and 8, right? Okay. Did she need a government identification to get in? In this case, she had a badge that allowed her to get in and out of different rooms. Okay? She's identified as the janitor. It actually says janitor on the card. Training provided? Not really sure what kind of training you would provide, but did they have the right to provide the training? Do they have the right to tell her, no, we want you to use this cleaning solution? Yeah, because they're the ones that provided it. Now, a true independent contractor that would be a janitor would do what? I will come in and for $1,000 a month, I will clean your offices. And I will come in when I can. I will use my stuff, right? I've got control over that. Here, the behavioral control falls clearly with the government because they're the ones that have the power and the control in that situation. Financial control. Financial control usually deals with significant investment in equipment and tools, unreimbursed expenses. Do they offer the service to the general public? In other words, are they in the yellow pages? How are you paying them? Do they have an opportunity for profit or loss? Okay, so let me give you an example back to that janitor. She didn't provide any of the tools. Vacuum cleaner was theirs, mop was theirs, the mop bucket was theirs, all the cleaning materials, the toilet paper, the paper towels, everything needed was provided by that county government. She didn't have the opportunity for profit or loss. Now, I know most of us feel like when our health insurance goes up, we're losing money, right? But we're not independent contractors, right? That's just an expense. Don't you love that when they go, we're going to give you a 0.9% raise. And by the way, your health insurance is going up 5%. Thank you very much. So what happens? She did not have any financial investment. She didn't have an ability to realize a profit or incur a loss. So the financial controls were with the government entity. Besides that, the government entity is the one that set the pay. If I'm an independent contractor, I'll tell you what I'll work for. You can either agree to that or not. We'll sign a contract. Here, they just said, this is how much we're going to pay you. Generally, if you pay somebody hourly, you can consider that, it doesn't matter how many hours they work, it's probably an employee relationship. Why? Because hourly says we are tracking your time. Now, where it says, do you offer services to the general public? I'm not kidding you. When my daughter was at Ball State, she worked for both Arby's and Dairy Queen at the same time. So she said, Dad, do both of them have to get, because I'm offering my services, because she heard me talk one time. I offer my services to different fast food restaurants. Yeah. No. That's not how it works, okay? You are not an independent contractor, because she didn't want the taxes taken out, right? She's cracking me up. No, because when you go to Arby's, you have to dress in the Arby's garb, and when you're Dairy Queen, you have to dress in the Dairy Queen, and you have to follow their instructions. Each of them are given to you. There's no such thing as an independent contractor, fast food worker. It doesn't work that way. I said, besides, you don't want to have to track all your expenses. You don't want to have to buy all your stuff. You don't want that. You want to be an employee. Yeah, but you know how much taxes they take out? Welcome to adulthood. Relationship of parties. Why this is important is it shows that there is an intent to create an employee-employee relationship. When they told me, oh yeah, she's been here for over 15 years, they're not seeking other people, they're just keeping her continually. What happens? She has an expectation that I have a relationship, and as a matter of fact, if you ask her, she says, I work for the county. Do you think that cleaning up the offices is a regular business activity? Sure it is. That trash has got to go somewhere, right? Is it integral to that business? In other words, can you separate her and classify her outside the confines of what that government has paid her for? Now, I will give you an example. She could have been an independent contractor if, and I always ask this, does she have her own business license? Does she carry her own liability? Now think about that. If she got hurt doing the job and she doesn't have her own liability insurance, who's going to pay for that workers' comp? You are, right? There's no way you could get around that. You're the one that's told her what to do, when to do it, how to show up, and what materials to use. So workers' comp would be your responsibility, and that makes her your what? Employee. Permanency. Yeah, we've had her for 15 years. Sounds pretty permanent to me. Sounds pretty permanent. Okay, so let's stop right there before I go to the next slide. And let me tell you, I promise you, I have seen this almost every audit in every state. And some of the reasons why, it's not because people are trying not to make people employees. It's just they're not familiar with the laws. And let's be honest, if you can get somebody and pay them through AP, you don't have to worry about Social Security and Medicare matching, right? Don't have to worry about any of that. So let's just get someone in here and let's get them to do a certain job and move on. There is a reason under the law why people who work elections, your election workers, are considered employees and not independent contractors. But guess what? I've seen election workers paid through accounts payable, but they're considered employees. Now, how you report them is different because there's different law for election workers. There's a different way to report them, but there's no such thing as an independent contracted election worker. In my town, you know who the election workers are? The retired folks who go, man, I'd love to go do that. But guess who tells them when to show up? Guess who tells them what they have to do? Guess who tells them what to do if a machine breaks down? Guess who tells them all the procedures they have to follow? The county or the city. There is a control there. Election workers actually fall under different statutes as employees. They're not independent contractors and they should not be receiving 1099s. But how they're reported on a W-2 may vary, but that's a different story. So let's stop there and let me see if there's any questions about, and this is my favorite thing, someone doesn't want to say that they have a situation, so don't. You can tell me, hypothetically, if this were to occur, and by the way, I want to let you all know something. I cannot pick my audits. I don't select them, which makes sense because, you know, if I'm speeding through a county and get pulled over by a deputy sheriff, I can't come back and get them, right? So I don't pick my own audits. So even if you tell me where you're from, it really won't matter. I'll forget 2 minutes going out the door, and I can't pick my own audits anyway. So what kind of questions?
We're having an issue right now, I guess, with the coroner trying to decide whether the coroner deputies are contractors or employees.
Great question. So no, you give her back the microphone because she's going to have to answer some questions. Question I have. Does the coroner or somebody tell them when they're going to work?
Yes.
They tell them when they work. So there's a bit of a control there. Do they have to follow certain procedures?
Yes.
Yes. Are the materials that they use provided by the government?
Yes.
Yes. So they can't realize a profit or incur a loss. So now we're looking at some behavioral control and financial control, right?
Right.
So the question that you have to ask is, what would really make them an independent contractor? What factors would even possibly make them? If they drive miles, do you reimburse them for the miles?
I don't think so.
No, they get
No.
paid by
Per case.
per case.
They get paid per case?
Yes.
Okay. So they may not be working in the field, but they might be working in the office?
Yes.
Okay. So just like the rest of us, we have to, you know, we don't get reimbursed to drive into work. So there's really nothing that, just on the short of it, that would even indicate to me that they could be an independent contractor, because there's too many controls just in what we've talked about would make them employees. So I would say that they would be W-2 reportable.
Okay, thank you.
Right there.
On your list of examples of public officials,
Mhm.
you've mentioned board members.
Yes.
Is that inclusive of people who sit on boards for like the health department, planning and zoning, those type of board members?
That's exactly the board members I would be referring
Okay,
to.
and they would all be considered employees?
They are all employees reportable on a W-2. And the reason is because they have to follow laws. They are
Right.
constricted. They don't have freedom to go outside those laws. And
Okay.
the other thing is, it doesn't matter how you pay them, whether it be per meeting, hourly, those have to be reported on a W-2.
Okay. Thank you.
Yeah, you're welcome. Right behind you again, I guess. Sorry.
What about your county attorney?
Yeah,
We-
what about them?
We we pay him through claims.
Hmm.
All the attorneys are paid through claims, except for our PDs are, because they're
I have not looked at the state statute for county attorneys or assistant county attorneys. I have not looked at that. So I don't know for Indiana what that might be. However, if there are laws that dictate the creation of the county attorney, the work of the county attorney, sometimes they put it in the county can hire an attorney too. So the question that you want to ask is, do I really have an independent contractor? Can they really operate independently outside the laws? Probably not, because I'm sure there are certain things that they have to report to. I'm not saying 100% sure that's the case, because I have not looked at the Indiana state laws for county attorney. But that's the first place I would look. If they're actually specifically mentioned, if they're told how they can be appointed, are they elected or appointed? That might be a good question. They're appointed. How they're appointed, what their responsibilities are, that's the first place I would look at. Then I would go to ask these follow-up questions. If they're performing duties for you and they fall down the courthouse steps, are you paying for that hospital visit? Or are they? Do they carry their own liability? I mean, I don't know. Those are questions you would want to look at. Are they using their own materials, or are you paying for everything? Do you give them a laptop? They're using their own laptop. I'm sorry, they're what? They're using their own laptop. So there's one factor maybe, but you have to say, what is the purpose we're hiring them for? What are the laws that govern their work? Now, I can tell you attorneys always want to be considered independent contractors. Always. Always. Why is that? We're going to write a whole bunch of stuff off, right? You know, when you pay an attorney, no matter, of course, this is a different topic, when you pay an attorney, always, 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 they are reported on a 1099 if they're not your employee. Drives them nuts, because now they got to figure out how they're going to report that, right? I have a lot of friends who are attorneys. When we go out, they always pull out wads of cash. And I look at them and go, hey, did y'all report that as income? Shut up. Shut up. Because people pay in cash sometimes, especially farmers. Yeah. And so I just kind of joke. I just kind of look across at them and I go, yes.
I have a question. It's regarding the courts.
Okay.
Court recorders,
Mhm.
where they are allowed to type the transcript during regular employee hours and be paid during those hours as employees. When an attorney, an interested party comes in to buy that transcript, they charge them a certain amount for per page for the transcript, and that also goes to the employee. Uh, yeah. And some of the judges didn't like that we said that that should be included in their payroll and that they should have Social Security, Medicaid. So they went to the Supreme Court in Indiana, and the Supreme Court said if you do an ordinance locally, they can be paid that way without putting them on payroll.
Yeah.
Yeah.
I appreciate the court's attempt.
I don't.
I was being nice.
I'm not.
It does not usurp federal employment tax law. So you can write whatever you want in an ordinance, but I still have to follow federal employment tax. And if they are an employee and they are typing on your time and they receive any other compensation because of what they did as an employee, that would be reported on a W-2. They are not an independent contractor in that nature in any sense, form, or fashion. Now, if they had their own business and they went out after hours doing some kind of transcription and they were paid not by you but by somebody else, I wouldn't bother me. But if any money flows through you, I would report it on a W-2, and here's why. Because if I come in and I were to audit that situation, you would be getting the tax bill, not the courts.
They set up a separate fund to pay them out of. Because
I wanna
they say
Yeah.
that we do pay the employees of the court out of payroll, but they say that the state law for courts is different. They brought us the Supreme Court case, and we told them, you can go get an ordinance if you want. We're not, the OFM and the auditor's office, we're not participating in the ordinance at all because I felt like it was pecuniary interest. They were making a profit off of a product that's actually the government's.
That is correct. I think that you are handling it correctly.
Okay.
Yep.
They are paying them anyway that way.
It doesn't matter where the money comes from. We don't care. A lot of times I'll get this, especially if I audit universities. Well, you don't understand, that comes from a federal fund. We don't care. You're controlling the payment. Is the payment W-2 or 1099 reportable? That's what I'm concerned about.
If I can expand on that question, in our county, and I know the court reporters are part of their roles and responsibilities as defined either within, I'm not sure if it's in law or if it's within Supreme Court rules, is to do these transcripts. Our court reporters do not work on them during the business hours. They work on them outside of business hours using their own computers at home. And most of the situations, they are paid directly by the people who are requesting that transcript, so the county isn't even involved in that money. There are situations where there's pauper defendants and perhaps the Public Defender Board or the court has actually, we are actually paying for that transcript, so the county is paying that person to do this work outside of normal business hours, but they are otherwise an employee of the county. So, you know, just we have two situations. We don't even pay any attention to that money that's paid directly to them by their customers, so to say. When we're the customers and they're using their own equipment after hours, should we be looking at that as employee work or 1099? because we don't control when they work on it, other than you can't work on it during the day. We don't provide them the equipment, and they just have to meet the Supreme Court rules and standards for getting it done in time.
Okay, so let me go ahead and address that. I will not address that. Let me tell you what could possibly happen. We have a really old mainframe system that is used for employment. When I say old, 1970s. And we are not changing out of that because, number one, Congress is not going to give us the money to do it. And number two, you can't hack into the mainframe because it's not internet-based. So it protects taxpayer data. So it's clunky. But there are a few things it can do. And one of it is it can check to see if an employee gets a W-2 and a 1099. I want to tell you that if you are issuing W-2s and 1099s to the same person, the likelihood of you getting an audit increases dramatically. No, the government entity, the one who's issuing the W-2 and issuing the 1099. Why? Because we see worker class or we see additional wages in those 1099s. Doesn't necessarily mean in your situation it's wrong, but I will tell you that it would probably kick out an audit if it's something that happens on a frequent basis. And that's something that it could rise to an audit. Now, in your situation, it's not your equipment, and basically it's money that you're paying. That might be a legitimate reason why they would get a 1099 and you not run that through payroll if they are truly independent of the work that you have them do. So, I go with that. I don't know all the factors, but right now, just on the top of it, that sounds like you would be okay. But it might kick out an audit.
Well, my question to follow up on that then is that if that person would have a business established to do that after hours and charge it as the business, would that make a difference?
I think it would be fantastic if that person had a business or an LLC and a tax identification number. It would be awesome for you because then you're not getting that W-2 1099 match situation. Oh.
Going back to election workers, poll workers, we pay through the claims process. Did I understand it correctly that they should be paid through payroll?
Okay. No matter how you pay them, the wages that you pay an election worker would be reported on a W-2 if they make over $600 in a calendar year. You're saying, well, gosh, we only pay so much for our election workers. Well, think about also your election captains or the election, because you're paying them monthly to meet. They might go over the $600, or if you have special elections. But the special rules are this. They are your employees, but you don't have to report their income if it's less than $600. If it is $600 up to whatever the current year max is for election workers, I don't remember what this year is. It could be $1,400 to $1,500. I can't. Is it up to 18? Okay, so it's $1,800. If it's you report it on a W-2, but you do not withhold federal, state, local, or even FICA tax. If they hit $1,800 or more, then the cliff provision fault comes into place, and then that entire amount becomes subject to Social Security and Medicare. So, there's a hand right. Hang on.
My question would be on public defenders. The county pays them X amount of dollars, but they also furnish them with health insurance. Should they be as employees or independent contractors and paid on claim?
All right, I want to let you all know that outside an audit, I have no power. Okay? But I have seen the public defender situation arise. The public defender, again, I'm going to go to state statute. Are they in state statute? Do they have to follow certain laws? And the question then becomes, they're actually working, even though they're working on behalf of an individual, they're working for the government. And then the other thing is this. It's an integral part of the court system. It's not a separate thing. So if they're a paid public defender, the question becomes is, how are they really an independent contractor? I don't know how that fits in. Now, could it be? Maybe. I had one in another state where they had the public defenders were employees. But then they had special public defenders. If that public defender had, like they said, they had two defendants, and then one wanted to rat out the other, they had to call in a special public defender to represent the other one, and they were trying to run that through AP. And I went, are they doing the same thing as the employee? Yep. Do they follow the same laws as the employee? Yep. Then how are they an independent contractor? How's one? So I think check your state statute, determine what it says about your public defenders. Generally speaking, public defenders that I have seen have been employees. But I cannot speak to your specific situation, but I would check that out.
I just want to touch on the public defender. We just went through an IRS audit, and they were okay with the public defenders being paid on 1099s because most of them have their own business anyways. So we didn't get dinged for that one. But the iffy one, when we didn't get caught on this, or they didn't say anything on this, or we didn't get caught. Well, they didn't say anything about this. Our county attorney, because he has his own law firm also, so they were okay with him on a 1099. We do not have contracts. Public defenders don't have to have the contracts anymore. We used to have contracts with all the public defenders, and a couple years ago we were told the state changed and we don't have to have the contracts anymore with the public defenders.
If you are paying a law firm, that is different than if you're paying an individual. Did they, okay, so let me ask you this question. Did they actually dive into it, or you just talked about it? Did they ask questions and pull? So on your final report, did they put for you that in the future you don't have to worry about? Okay. Right, okay. Look at your final report. Inside the final report, on one of the pages, it will say, we made an adjustment for board members, but in the future you can rely upon this audit not to make an adjustment for public defenders. If that's on there, then a thorough search was done and you will never have to worry about public defenders in your government entity again. If it's not there, then it might have been, it was just conversational and dig it, but I don't know that situation. So, yeah. Okay.
Of course, this is hypothetical.
Of course.
Should throw
Yes.
this out there. Would you be able to maybe, is there a way for a county to differentiate between, with regards to election workers, these one-day election workers versus those who are working early voting? Because, again, hypothetically speaking, it seems to me more realistic to run those one-day people who are definitely not going to meet that, that limit through AP, and then those early voters who, if that county was to hypothetically keep track of the FICA and things of that sort, and then tax back to $1, I mean, is there a way to differentiate
Oh,
between those
okay,
two?
listen, I don't care how you pay them. If you pay them through AP and they don't hit the $600, I won't care because you didn't have to report on a W-2. So I don't care how you pay them. I'm just saying that they're reported on a W-2 if they hit that $600 mark. And then if it's over the maximum, whatever the maximum is on that particular year, then Social Security comes into play. So I don't really care how you pay them. All right, let's say that you just don't know. Let's say you've got a situation and you're just, guys, it could go either way. How do we do this? There are a couple of things that I would suggest. One, we have some good forms, good publications just for government entities, to how to kind of weigh some of that. But if even after that you're not sure, there is a form that you can complete, the SS8. You can send that in with the facts and the situation, and we will help you make a determination. It'll be an official determination if you're just not sure. When I was working for the state of Kentucky, I had a gentleman fill out the SS8 on his end and said, I'm an independent contractor and they want to treat me as an employee. And it made him mad. So I got the SS8 to complete. Well, I didn't even know he filled out an SS8. Heck, I didn't even know he was an employee because there's a lot of people that work for the state. So I delved into it a little bit, and I found out that he was over here on a visa to go to school. But one of our departments was utilizing his services. Well, now I got two problems. One, he's over here for an education visa, but he's working outside the ability on the visa. So I had to call up and get information. Well, here's what I found out. He was doing the same work as employees in the office, doing everything that everybody else does. His problem was he didn't like the fact that he was paying into Social Security when he was going to leave our country and didn't think he was going to get it back, right? So that was his beef. That's why he wanted to be an independent contractor. Well, I got all his documentation. I found out his visa expired. So I responded and said, you got other things to worry about than whether we're withholding Social Security. But I completed the SS8 form. The IRS looked it over, and they came back and said, no, you have an employee-employee relationship. You should put it on W-2. Okay? So we got official guidance for that specific situation, for those specific facts. So if you're just not sure, you can complete that form. One thing an SS8 cannot do, it cannot change any facts and circumstances under a Section 218 agreement. Okay? So that's important to know. Before you fill out an SS8, you might want to check out what does your 218 say and are there any exclusions. Now, Section 530, the reason I was asking over here is whether anything was listed on the final report. Section 530 is something that is a provision that is put into place that actually allows you to go, I have depended on something else that's legal, why we don't treat that person as an employee. So when we're looking at something, we look at Section 530 to see if there are any issues as to why there's a dependency on 530. So let me give you some requirements. Reporting consistency. One of the things we look at is do you issue a 1099 to everybody that does that position and makes over $600? And are there any people doing the same thing getting a W-2? If you got people getting W-2s and 1099s for the same thing, you don't have a reporting consistency. Okay? So then Section 530 would not be allowed in that situation. Okay? Substantive consistency. Oh, and also, if you didn't issue 1099s and you were supposed to, you also don't get Section 530. That relief says, hey, we don't have to treat these people employees because there's some reason why we have that exclusion, and that's what Section 530 addresses. So treating all workers in similar positions the same. Okay, so we look at that. Cannot be claimed if the taxpayer has treated any individual holding substantially similar positions as an employee. So you can't say, well, our sheriff is an employee, but our deputy sheriffs are not. No, that's similar. Can't do that. Now, a reasonable basis is the next thing. So if you meet the consistency, so we can go, yep, you met the consistency, then we look to see if you have a reasonable basis for treating them as an independent contractor. One is, did you have a prior audit? And in that prior audit, did we tell you we looked at it and this is, you're fine, don't worry about it from here on out? The second thing is, did you have any judicial precedent? Was there law that you relied upon to say that these people should be independent contractors? Industry practice. Industry practice says this is the way the industry has handled these people. Generally, it has to be more than 25% of the industry doing the same thing to actually account for that. Now, I want to let you know something. Saying, well, everybody else treats their board members that way is not industry practice. Okay? It's kind of important. I can't tell you how many times I've gone to a county or city, and then that city or county goes, well, the city or county does it exactly like we do. Is that a referral? Do you want me to get there? What are you trying to say? What? You want me to look at them too? But it is funny, but just because somebody else, that doesn't make industry practice. It has to be almost codified industry practice. Let me give an example. Salespeople. Across all spectrums, salespeople are generally treated as independent contractors at car dealerships. Okay, we can live with that. Even if there are some dealerships that give their folks W-2s. But usually they'll go in there, the larger one says, we're going to give you, every time you sell something, you get a commission. And that commission then will be 1099 reportable. All right, if that's an industry standard, then we can go with that. Section 3509, and here's some good news. This is great news. This is so awesome that I don't mind looking at worker class issue because I know that we have Section 3509. What that allows us to give you reduced tax rates. If you've treated people as independent contractors, okay, and we talk about it, and you go, man, we should have treated them as employees. And you issued them a 1099, we give you reduced tax rates. Basically, if that position was subject to Social Security and Medicare and federal income tax, the overall tax is reduced to just 10.68%. Okay? When a lot of times, FIT by itself is usually anywhere between 9 and 12%. So we reduce it for everything. Because what we're going to do is we're going to talk about it. You guys are going to say, yeah, you know what? We're going to start doing this right going forward. So we're going to make that adjustment with those rates. Okay? We have different guidance, different things about 3509, but that's the main thing I want you to hear about. Okay? You have this in here. I don't want to go over that because that just kind of makes your eyes glass over. I want to move on to what's really awesome. It's called the Classification Settlement Program. Right now, I am auditing tax year 2016 generally. If I find a worker class issue, and we talk about it, and I provide the law, and you come back and you go, James, we agree. We should have been putting these on a W-2. Okay. We have a classification settlement program that says this. Even though you did it in tax year 2015, even though you did the same thing in 2017 and are now doing it in 2018, we are only going to make an adjustment at the reduced tax rate for 2016. You get a pass for 2015, you get a pass for 17, you get a pass for 18. All you have to do going forward, starting in 2019, is treat them as employees and report them on a W-2. Great, awesome settlement program. Do you know why we offer it? Because there's so many people who get it wrong. I'm telling you, 90% of my audits deal with this. That it's a way to help you go, all right, we've educated you. You're going to go forward. You're going to do it right. We're going to cut you a deal and starting 2019. Go. Report them. And you don't have to worry about anything else. And it's mandatory. I have to consider on every single one. I can't come in and go, yeah, I don't know if I like you guys. I'm not giving you the classification settlement program. I never do that, but I'm just saying. There might be some agents out there that are mean. I mean, you all have heard on radio commercials the IRS is the biggest, baddest organization on the planet. We're mean. I always laugh when I hear that. I'm going, that's not me. I don't know what they're talking about. Because you know what I love about this job? Is because I know government entities want to do it right. They just don't have all the training to know what to do right. I spend the majority of my time educating. That is awesome. Because you know when I leave, most people go, man, I'm so glad you were here. Seriously. I have some people who get mad if I come back into the area and I didn't tell them I was in the area, so we go out to lunch. I go, I can't tell you I'm here. There's the privacy. I can't tell you I'm auditing. I can't. Somebody saw me in a Walmart in a city that I'd audited their entity before. They saw me. They go, James, what are you doing here? Are you doing the county? I go, I can neither confirm nor deny. I don't know what's wrong. Wait, stop. I was at one state auditors conference where the auditor goes, James can't tell you where he's been, but I'll tell you, he just went down to county so-and-so. Okay, stop. But anyway, it is awesome that this program is set in place because it helps you set things right without drubbing you financially. And I like that. It says prospective compliance basically, hey, moving forward, we're going to do this right. Are there exclusions to the CSP? Yep. You didn't file those 1099s. Or you had a prior closing agreement on the same issue. Sorry, we can't give it twice. We can give it once. As a matter of fact, I now have a taxpayer in Georgia I've got to go to. It's the same thing. And I hate it. I hate it. But my hands are tied. I won't be able to offer that. So, if we put an agreement in place, stick to it. Because guess what we do? We come back about 2 or 3 years later and just do a spot check to see if you're following that agreement. I had one Pennsylvania county agree to it. Then they had a whole new election. New people came in. And I got a call from the finance director. She goes, James, I just want you to know, I'm retiring today. I go, well, congratulations. And she said, by the way, they're reneging on the contract. I said, is this an official referral? Yes, it is. Okay. So, bad, shame on that county. All right, more exclusions. There's different things. Obviously, if there's a fraud or criminal investigation in place, we can't offer that. I generally never ever see that. So we don't have to worry about that. The CSP talks about the different perspectives. Usually, so let's say you had $10,000 that you paid board members. Well, you're going to get that 10.68%. So that ain't bad, is it? That's all the tax you would have to pay. You don't do W-2Cs. You don't do 941Xs. Nothing. We just say treat them right going forward. There is a way that you can get 25% and then the 10.68%. How is that? You had some reasonable basis for treating. Even though now you know you shouldn't have, we had a reasonable basis. Like, we had a CPA who told us to do it this way. And we have it in writing. Ah. Okay. You all relied upon what you thought was official guidance. So we might be able to offer you even a reduced rate. The last one says no tax plus prospective compliance. Yeah, I've never seen that happen, but it's possible. Doesn't mean it can't happen. So we say that prospective compliance generally begins in the next quarter If I'm halfway through the year, I'm going to push it out until January 1st, and hopefully most agents do. I don't know what other agents do. We don't talk to one another. We might get but we can't even tell each other who we're auditing. We can't. It's that private. So I don't know what they're doing and who I'm doing or anything else. We just can't say that. No Forms W-2 are required. That's awesome. If you go, we're not doing the CSP, which I don't know. I have not had anybody ever say that. You get the normal adjustments. So they would be the full rates. And you wouldn't just have them for that year. You'd have them for every year that's open. I don't know anybody that's ever done that. But you have the right to say, no, I want to pay more money. And we'll go, okay, well, that's fine. A CSP where it says offer is extended in the appeals process, let's say you disagree with me. Let's say you say, James, you are 3 fries short of a Happy Meal. We don't believe that these people are workers. No matter what laws and law cases you get, we disagree. Okay, well then you can go to appeals. The appeals officer can actually go, we kind of agree with James. Now you can take it to tax court, or we can offer you a CSP again. At that point, you can decide, do we want to go to tax court, or now will we accept the classification settlement? They can actually extend it there too. So there's more than one opportunity, should that be the case. Okay. That's it for independent versus employee. Now, I'm going to do something, and I'm going to ask you all to only use this sparingly because I'm just one person. I'm going to give you my email address. If you have general questions, I will help you. Or if you want to know what my screen name is for Words by Post, I'll be more than happy to give you that. James dot Driver, that's D-R-I-V-E-R, at IRS.gov. If you have general questions, I'll be more than happy to help you. If you have something that you don't want to put in writing, you can say, James, please call me at. Because sometimes you don't want to put something in an email, right? And then we'll talk generally and hypothetically about that situation. All right. Thank you all.